Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. My name is Henry Lau and today is Thursday, March 14, 2019. The time is 2:30 a.m. GMT. So today we will be looking at the chart of oil. This is a follow-up to our previous forecast. And here you can see that in the 1-hour chart, oil has sort of broken to the upside in the past 24 hours. And it has broken all the previous peak here. All right, all this previous peak has been broken, confirming that the next leg higher in oil has already underway. So you got a bullish sequence stem. You have a right side higher over here, and this all suggests that we favor more upside in oil, and therefore dips something like this is not to be sold, right? Because we need to always follow on the right side of the market and not trading the other way around, even if there is a pullback, but not trading the other way around. And we expect any pullback in oil to continue to find buyers in 3711 swing, okay, for further upside. Now we are counting this rally from here as a 1-2, another 1-2, so it's a nest, right? And so it should be quite strong here in terms of the follow-up to the upside. Now, if you recall, last time when we had the chart of the day, I made a video, all right, with the title "Crude Oil on the Verge of a Breakout." This one is on February 27th. You can look at the history, right? This is the chart at that time. And we were calling for the upside as far as it stays above this 51.37. Not sure if you can see it here, 51.27. So it turns out that oil did a double correction in the wave 2, did a double, but still holding above 51.27, and now it has already broken all the previous high. So if you can see now the current changes here, so you can see this wave 2, right? This wave 2, instead of here, which is what we were saying back then, it did a double correction, but still holding above 51. So if I look at the larger degree time frame, this is the 4-hour. This is the wave B that was mentioned in the video in February 27, right? And this one is 51, around 51.2. So we did this double correction here, a larger 3 swings pullback, and then found another buyer right at the 100% extension, then starts to rally again. Okay, now if you look at the larger degree, this is from December 24, 2018 low. We can see a sequence of higher high and higher low starting from here, and we can label this entire rally. Again, this looks impulsive. This looks like a 5 waves ending with A. This one looks like a flat ABC, right? Expanded flat. Then, since then, we have continued to extend higher. So we got another. I mean, we are in the C leg now, or I mean, this could be a 1-2. We don't know. This could be a 1-2. In which case, then the rally is even more. Is even bigger if that's the case. But for conservative purpose, let's label this as an ABC. That means the C leg, and in the C leg we can see clearly 1 and 2, and we make a new high, and definitely it's not complete. This leg is way, I mean, it has not reached 100% of this leg, and this A has not reached 100% of this C. So we should be expecting at the least a target over 63 to 65 as the next sort of swing target on the upside in oil. All right, and again, back to the 1-hour chart, this breakout that we had in the past 24 hours has confirmed the bullish view of the oil, right? And the dips therefore should continue to find buyers and support for more upside. And I explained also in the previous video on this what looks like a inverse head and shoulders on the daily in oil, right? And you can see over there, once the neckline has been broken, oil has tried to retest it many times. 1, 2, and then now it spikes lower, even scaring people off, but only to close again by the end of the day. You can see the candle still stays above the neckline, even though intraday on that day we do break below this neckline, perhaps stopping a lot of people that trades based on this pattern, right? Since they see, okay, oil breaks down again, they close the position only to completely reverse by the end of the day and forming some sort of a hammer candle, right? And then now starting to rally again. So I think we go back to this idea of the inverse head and shoulders. Now if you measure from the head to the neckline and project it here at the point of the breakout, you can see it can potentially go to as high as 68, which is the same distance between the head and the neckline. But for conservative purpose, again, if you just use an ABC type of analysis, then it will at least go to the 63, 65 region here, where the C is going to be equal to the A, and then perhaps over there we can find another profit taking and there is pullback again. But that's down the road. In the shorter cycle though, we should see for the upside until at least oil reaches this region here. Okay, so that's the update for oil, and if you enjoy this video, you can try our service. We do this type of analysis and letting you guys know about the how to buy, where to buy, how to manage the risk, and so on in the live trading room as well as the live session. We have 14 days free trial, and the link is in the description of the video. So see you all again tomorrow, and have a nice day everyone.